Okay, what is going on, MegaWhale team? Welcome back to the channel. Thanks for tuning into today's video. We haven't had a video for about 5 days. I've been completely and utterly destroyed by the flu or COVID, whatever it is. I've probably never been this sick before, so it's been a hell of an experience, but hopefully we're back here to do daily videos again. I've really missed it. Like I said, I really enjoy doing videos for you guys. I love to share my knowledge and wisdom with you guys and help you guys along this journey that we're all in together, all trying to just get through day by day and try and make the best decisions we can. With that being said, guys, head down to the pinned comment down below. Join our Telegram channel. You have access to all the daily updates, market analysis, so much more. We've been using this a little bit more in the last few days because I haven't been able to post on YouTube. So it's been a little bit of a substitute, but we'll go ahead and get back into it. So Bitcoin has had a pretty explosive move upwards from the symmetrical triangle formation we had. And we've talked a lot about this symmetrical triangle formation in the last few weeks, as well as this major diagonal resistance zone, which was our dynamic resistance zone between these two dotted lines. We also talked about that. We've exploded out from there. Now, Bitcoin is in a pretty tight spot right now, and you're probably thinking, you know, what's actually going on right now with the price? And why is everyone, getting all bullish again? Why is everyone getting hyped up again? And why are some people still massively bearish? And it's because we're not really yet confirmed a reversal, and we are at the same time so close to confirming of a reversal that it almost tricks people into believing that has already happened. So you have these two extremes in opinions clashing right now. It's a bit of chaos in the market. So we're just going to kind of summarize it all up and clear some air for everyone, because at the end of the day, guys, if any YouTuber has been bullish or anyone has been bullish on Bitcoin in the last few weeks, it's been me. I've been telling everyone, this is probably the bottom. We're probably bottomed out over here. And in my last video, I said pretty much every single technical indicator out there is suggesting that we go up, besides potential economic data that hasn't been released. So, even with all of that I've said, I'm still not bullish. I'm still actually quite neutral until we get a reversal, and we haven't had that reversal yet. So let's go ahead and talk about all of this. So we're going to need a move over this horizontal resistance range, and you're probably thinking, okay, horizontal resistance range, I've heard this in the last few days and in the last 24 hours. Let's talk about it a bit more. And we first showed you, yesterday morning, this 23,800 all the way down to about 22,600 major horizontal resistance range. And this has been a range that it didn't provide a lot of contention or confluence in a chart for a very long time. It was only a short period of time, about 8 days, but it was the significance of that range and what happened after it that made that range significant. Because when we did actually break past that range, we had this explosive move upwards. We had, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 green candles out of 10 green candles in a row right after, which is massive for Bitcoin. So, that is sitting around 23,800, and we had that daily candle close and we pushed upwards. So that is where we're at the moment. We're back in this range, a major horizontal support resistance range, a major range of contention and confluence in the chart, and a very critical point for Bitcoin in terms of macro price action, and a reversal point. And if we do push upwards here, we will most likely reverse. And if we do lose this level, it is going to act as a major resistance and knock us back downwards. So let's go through those two things. Where will we go if we push through it? And then we'll talk about where will we go, if we drop below it. And then we'll talk about the macro, the impact on the macro, and what can actually happen moving onwards with the interest rates and that kind of stuff, and kind of where you should be, situating yourself right now. So let's talk about that. So what happens if we actually push upwards from here? So we've talked about this on the channel already a lot. It's just kind of summarizing old news. We do have this gap in the VRPV over here, all right? And we've talked a lot about that $28,000 region over here. The most likely move, if we do push past 23,800 and get that daily close upwards, we'll have a very violent move, all right? It might take a few days, but it'll be quite violent, up to $28,000. Okay, $28,000 is a target. Now, if we do zoom out, that doesn't make us flip this macro structure, okay? We are still in a macro downtrend, all right? This is the thing. You have to be able to differentiate short-term bullish, all right, macro bullish, and then you have your structural patterns, okay? So we need to flip this macro structure to be macro bullish, all right? But if we do flip 23,800, we have a bottom reversal, okay? There's two differences, a little different. They can be quite mixed up as the same for people who don't quite understand the difference, but there are little differences in that. So, okay, what does it mean? If we flip 23,800 and we have a bottom reversal, it means there's a very low chance that we will revisit or drop below these lows, okay? If we break the macro structure and have a macro structure reversal, it means this entire downtrend has been flipped and we will continue in a new upward trend, okay? So that's how that kind of works. It's a kind of a difference over there. So let's talk about that. We break up past 23,800, we push up into a new short-term uptrend. We have that bottom confirmation reversal. Obviously, we were correct about that. And we push $28,000, okay? That is what would happen. Let's talk about the downside. You know, what would happen here if we fail? If we fail to break past 23,800, and if we actually lose that horizontal support line? Well, the most logical and possible scenario would be actually we come down and retest this zone over here. Obviously, this would provide a massive area of support resistance and would be a flipping point. We have scenario number one where we flip this point and push back upwards. That would be incredibly bullish. Obviously, we have this kind of semi-inverted head and shoulder pattern over here. And I say semi because technically it's not a valid one because our heads and our shoulders aren't, you know, ratio-wise, they're all equal and we need the head to be larger. All right, but we could also almost call it an ascending triangle formation. There's a whole range of different formations we have here. Some people see bear flags, symmetrical triangles, there's a whole range. But what we can identify is this zone over here. This horizontal zone is a zone of contention, confluence, and support and resistance on the chart, and therefore it will be a flipping point and a zone of support and resistance, or resistance, depending on what side you're on it, for the price action. So a possible bounce point. So that would be a possible bounce point. That would be more bullish. This would be more bullish than if we just break 23,800 right now, okay? Now, if we do lose this level and push under, obviously the next zone of support is this uptrending line, all right? And then obviously we lose that, we're heading down and again. And we'll talk about that in a second, okay? So let's go talk about the macro. And here it is, the macro is looking pretty decent. And what do we need to actually see for a macro, or should I say a bottom reversal confirmation? Not a macro reversal confirmation. Macro reversal confirmation happens when we break this macro descending channel, okay? So we break out of here, push upwards, all right? A bull trend reversal or bull trend confirmation happens when we break 48K. That is when we become a new bull trend initiates, right? That's when we're in this like bullish parabolic rally will start. We'll go to new all-time highs, okay? But a bottom reversal occurs when we close a weekly candle above the 200-day moving average, which is happening at the moment. We've still got 4 days into our close, so it hasn't happened quite yet, but it's currently attempting that candles, currently attempting to close above, okay? Now you're probably thinking, and this is what I've been thinking lately too, you know, a few days ago, you know, take it back to the 18th of June, you know, when we just come down and touch 18K, you know, why was everyone so bearish then and now up at, you know, 10%? Why is everyone so bullish now? It's what I kind of dial it down to is because people don't understand how to use indicators, and they take lagging indicators at a face value. And what that does, it makes you either completely wrong in your predictions or completely late because you're taking a bit of information that isn't kind of up to speed, it's lagging, okay? So you would have heard me say a lot, you know, the majority is always wrong and the bias is always late. And it's a very, very common, I guess, great example to that, you know? When you take a look at an indicator, and we'll take a look at the MACD, I just want to kind of apply some context to what I'm saying. If you take a look at the MACD, all right, and if you look at this and say, okay, we have the MACD converging upwards, okay, we're underneath the 0 point line and we have a clear decrease in selling volume, therefore we're bullish, all right, and therefore I'm going to buy. If that is the extent of your analysis, you are completely going to be incorrect most of the time and you're going to get wrecked. That is as simple as that. What you need to do is you need to take the information from the technical indicator. All right, I personally don't really like the MACD, but we're just going to use it for example. You take the information, so therefore you derive what information you can from the indicator right now. You apply it to the chart. You derive information from the macro structure of the price action, all right? And then you infer a possible scenario in a future period to base a prediction off, okay? So here's an example. When the price was down over here at $18,000, right, and I was telling everyone this is most likely the bottom. I even started buying Bitcoin. We had an accumulation plan in VIP. You can see all that. We were buying Bitcoin down there, okay? Every single freaking indicator was telling us we were wrong, okay? Every single indicator was saying the price was going to continue downwards. But look what happened, the price went upwards because they're lagging. So if you're taking lagging indicators at face value, you are going to be wrong. And we've said this before, indicators are very, very, very good at predicting trends. They're phenomenal at predicting trends, but they're terrible at predicting tops and bottoms. You have to use macro structures to predict tops and bottoms. And I've told you guys this, and many of you would already know this and many of you have followed this, but for the new people following, new people here, take this bit of advice, because I've been able to predict the top and the bottom perfectly, multiple occasions, not just this one occasion, using this information. We've said this many times. So when you're using analytical tools, technical indicators, the most important thing is, number one, you understand in full detail exactly what the indicator is telling you. All right, you take that information, apply it to the current scenario in the chart. All right. And then using a macro structure, you infer a possible scenario and then you make your prediction based on that, okay? It's not the other way around. You don't just look at a technical indicator and then see what it's telling you and then make a prediction. You have to do that extra step. You have to do a predictive analysis, all right? It's not just you're not just looking at it and making a prediction. You're looking at it, you're inferring, you're using the information you get from it, you're using your experience, your understanding, your knowledge, you're applying it to the chart, you're thinking about what would influence it, what's going to happen in the next few days, what's going to happen in the next few weeks, and then imagine how the indicator would respond, and then you take that information and apply it. So let's go ahead and talk about, what would happen if we do drop below, what's going to happen if we do drop below, because until we do have that confirmation, until we have that bottom reversal confirmation, the candle hasn't closed yet. The bottom's technically not in, although it's looking likely, it's not technically in yet. Until we get that confirmation, guys, we'll still run the risk of going lower. And let's just take a look at Bitcoin right now in the small time frame. I just want to go back and take a quick look because I saw it was moving a little bit. But we'll come back to that point in a second. I just want to see what's happening. We can see we're bouncing from the bottom of this range. So already we're seeing this, ping-ponging from this range already, and it's going to be interesting to see how long we stay in that range. Obviously talked about that already. We're interesting to see what happens. So we obviously also have the ECB coming up the interest rate decision in the next, I think it's 7 or 6 hours. And then we have the Fed Reserve coming out with the interest rate decision on the 26th or 27th. And we've talked a lot about how, increasing interest rates impact cryptocurrency and also impact systematic risk. And systematic risk is really what drives the price of these assets for the most part. And I say for the most part because there's only really one component of two components that drive, that make up the total risk. So you have systematic and non-systematic risk. And stuff like interest rates, inflation, monetary policies, tax implications, that's systematic risk. And it kind of creates a narrative, or overarching narrative for the direction of these assets. If systematic risk increases, all right, we generally have higher betas, all right, this all gets moved over to the right, all right, and the risk of these assets increase. And when the risk of these assets increase, we have what? We have companies selling their assets to increase their balance sheets, cash flows, because they wouldn't, first off, they don't want to be holding risky assets when the interest on their debt is increasing because interest rates are increasing. And second off, because the interest rates on their debt is increasing, they have to spend more cash, all right, to keep the debt to service ratios, relatively positive, to keep their balance sheets healthy so they don't get wrecked, they don't look weak, okay? That's what happened with Tesla, all right? We've talked about this for years. We've talked about it for a very, very long time now, okay? So that kind of explains the first part, all right? The second part is the risk of the individual asset class, okay? Now, there's two things, like I said, that those two components, non-systematic and systematic risk, makes up the total risk of the asset, and the total risk of the asset, and what people perceive it to be like, is one component of what drives the price. So, we've talked about that already. Now, what happens if the interest rates rise? We'll most likely see an initial negative reaction for these asset classes, all right? Now, the question is, will that negative reaction be strong enough to facilitate a continued move downwards past that support line into lower lows in the time to come. And this is kind of one of the things is if someone said that the systematic risk will increase for 4 weeks only and then return to normal, do you really think the asset will drop for that entire 4-week period? No, it won't. It doesn't work like that. It will have an initial drop, all right? It will shake whatever people at the market, all right? It will bottom out and continue upwards, okay? Because people will then expect it to not increase, so they expect it to get better. So it's one of those things where just because systematic risk has increased or is high at the moment, it doesn't necessarily mean that anytime after the announcement, the price will continue in that direction. Now, the only reason it has been doing that, and we've also talked about this, so I understand this, to explain this to you, is because we do expect, or we have expected for the last few months, for increasing interest rates to rise periodically over the next few months. So it's kind of this like laddering or like shelving effect of increasing systematic risk month on month, for the next few months, and therefore his assets are, getting pegged down and down and down and down, and these companies are selling their assets down and down and down and down more and more and more, which is dropping the price as interest rates continue to rise and rise and rise. Their obligations on the debt increase. And we talked about all that, and it's one of the main reasons why these asset prices has dropped down. So that's another reason why, people believe, and a lot of people are strongly believing, still that, obviously, we haven't bottomed and we will continue to go lower. And until we get that confirmation, that is a real possibility, of course. And of course, this is information we don't have access to yet. We just don't have access to it. We can make a prediction, all right, that interest rates will be higher and Bitcoin will get negatively affected and you'll continue down. That is a real possibility. But another thing, guys, is just because the interest rates come out poorly, it doesn't tell us, all right, based on the chart above, what it doesn't tell us is it doesn't tell us for how long, and it doesn't tell us how much buy these risk assets will drop. We could very well see a very short drop that's short-lived, and then we'll rally back after for the rest of the month. So that's another thing to keep in mind, okay? It's another thing to understand about it, another thing to keep in mind. There's a big difference between financial assets. Cryptocurrency and risk assets, generally financial assets, stocks, cryptocurrency, they move a lot faster, which means, A, they react to news and economic data faster, and they recover faster. Very important to keep in mind. All right, you got other indicators, GDP, and you got the housing market and stuff like that. They're much slower. Okay, negative economic news, it takes a long time for it to show up in these asset classes or other economic data points. It takes a long time to show up. That's why some places in America is like, we're not even in a recession yet because we need 2 quarters of negative GDP and stuff. But in reality, if you're waiting for that indication, you've missed this entire drop and you're held through it, being like, oh, we're not in a recession, even though my stocks are down 80%. Oh, but we're not in a recession. But it doesn't matter because you got wrecked anyway. So at a certain point, it requires, again, a level of foresight. Like I explained with the MACD as an example, if you're just taking a look at an indicator, whether it's a technical indicator or whether it's a piece of economic data, and you're taking it at face value and you're making your analysis and you're making decisions off a face value indicator, you are going to be either wrong or late, or you might get lucky and you might be right, all right? But for the most chances, you are wrong or late, okay? You have to understand what it means, where it actually fits into the economy or the market, how it impacts and interacts with everything else within the economy and the market, how the particular asset class you are investing in reacts to that news, and therefore what could happen moving forward. You create your possible scenarios, you apply different probabilities to the scenarios, you have different validations, you have different invalidations for those scenarios, and you bet on the scenario with the highest probability. That is exactly what we have done here in this channel. And maybe, yes, I haven't sat there and haven't explained, every bit of information I know. My job isn't, I'm not a lecturer. I'm not a, university lecturer. I'm not here to teach you guys absolutely everything I know about the economy. Like I said, I have a lot of experience in economics, finance, accounting. I've been in university doing about, I've done that for years. I've been a trader for 7 years now. There's a lot of stuff I do behind the scenes here from analysis standpoint that I don't share. And if you'd like me to share, I could, but I just don't feel the need to. I'd rather just show you the results of my study, the results of my analysis in the videos. It's just quicker, it's easier to understand, and it's better for you guys. But what I'm trying to get at, guys, is you have to break it down, all right? If you're just taking a face value analysis, you're gonna be wrong, okay? I think I'm gonna leave the video there today, guys. I hope you enjoyed. Like I said, still not feeling great, still not feeling amazing, but we're back here, and hopefully we're back again doing daily videos. Not too long. The last 5 days I haven't been here. It sucks, it really does. I love being back. I love being on YouTube. I love sharing my information with you guys, and we'll catch you into tomorrow's one. Cheers. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.